Good evening. Welcome to another episode of DK Live. This is your host, Dilawar Khan. In DK Live, every week we invite industry professionals, top industry professionals of the real estate, and we discuss about the current topic that is trending in the real estate industry. And that industry professionals, they deliver their expertise in this field. And today we have another trending topic that is private money mortgage, that is PMM. So this is another alternate of the home buying for the buyer. So whenever somebody doesn't get the loan other way, this is another alternate. And in this episode today, we have an amazing guest. He was here before. This is the second time we invited him because he added so much value for us. I'm going to invite, his name is Anthony Nozzolillo. He is one of the top attorneys in the real estate industry. And Anthony, welcome to our show today.
Delore, how are you? Happy Wednesday. Thank you for having me back.
I'm very good, and I'm same time very excited to have you back because we're going to be discussing about one of the trending topic in the real estate industry, that is private money mortgage. I know you are the expert of that. You are ready for that?
I am ready, sir.
Okay, excellent. So before we go into deep dive of that topic, why don't we discuss a little bit about whoever they don't know about you? Let's tell about yourself a little bit.
Sure. My name is Anthony Nozzolillo. I am a seasoned attorney focusing in real estate. I serve as chief legal counsel to On Point Land Services Corporation. It's a real estate title company located in Merrick, New York, on Long Island. I represent buyers, sellers, lenders in both routine and complex residential and commercial closing transactions. In addition to that, landlord-tenant issues, short sales, auctions, bankruptcies, real estate litigation, everything from A to Z as far as the realm of real estate is concerned.
Excellent. That is a very, very top level of profile. Thank you so much for the audience. So we're going to go to the topic straightforward, that is purchase money mortgage, that is PMM. Before going into the deep dive of the topics, let's start breaking down one by one. First of all, let's discuss about what is a purchase money mortgage, that is PPM.
Okay. Well, a purchase money mortgage, essentially, it's validating an alternative option as far as purchasing a home is concerned. It exists in the non-conventional realm, whereby, let's say, a potential purchaser doesn't have the credit worthiness to obtain a mortgage, or does, but only a partial mortgage, but still wants to buy the home. And the seller has been listing the home for quite some time, has not had any takers, and needs to essentially sell the home because, again, it's carrying costs that they're incurring. So this is where the symbionts exists, whereby the purchaser, as far as the lending component is concerned, can procure a mortgage from the bank for a certain portion, and then for the rest, it could essentially the seller will hold the mortgage. What does that mean? Let's say the house is $10. The purchaser will remit $5, and the residual $5 balance will be where essentially the seller becomes the lender, and the borrower or buyer, both terms, will then pay the residual $5 to the seller in the same type of dynamic whereby the seller, let's say the seller was a lender or a commercial lender. So it's called the seller holding the note as far as that's concerned. And that's essentially what would happen. They would hold the promissory note. It allows the seller the ability to sell the home and now convert some of that debt into cash because, again, they are receiving money. And every month, the carrying costs will be also paid for by the borrower via the monthly payments. So it helps the seller in that regard as far as the carrying costs are concerned. They're eliminated. And it helps the buyer because now they can achieve the American dream of owning a home, but for the bank not being able to lend them money. And again, it could be a portion or the entire amount of the mortgage. That depends on, again, the buyer and the seller and the lending component as far as what they're willing to lend to the buyer.
So is it interesting? Is it like a rent to buy option?
That's actually the lease with an option to buy is what you're referring to. It's somewhat analogous to that. it's a little bit different. The lease with the option to buy does not guarantee that the purchaser will be the vested owner. The way a lease with an option to buy is, and I was going to talk about that at the end, that's the alternate means
Okay,
available.
so we'll go there. That's fine.
Okay, wait to the end.
Okay, so that's interesting. So purchase money mortgage is a great option. So now how this is benefiting to the seller and how it's benefiting to the buyer?
Okay,
Can you
great question. Well,
differentiate a little bit? Yeah.
yeah, sure. Well, the benefit to the seller is, again, especially in investment property situations, if the house has been listed, the seller already has another residence, obviously, that they're carrying. So now it's a second home. If they can't rent it out and they can't sell it, now they're carrying potentially two mortgages and two carrying costs for home. So now the fact that there is someone who can take that property off their hands and can do so via this PMM option, that is a benefit to the seller. Because again, but for the PMM option, they wouldn't be able to sell to anyone because A, no one's looking at the house, and B, if the person who actually does come to the house can't procure the financing, it allows them the option with this flexibility to sell the home, knowing that there'll be a PMM involved, but nevertheless, at least they'll be getting some money up front. And if they're not, at least they'll be getting stream of payments every month to cover the expenses. For the borrower, it's a benefit because again, if the lending component, especially now, banks have rigid guidelines or interest rates are high and they don't qualify for a loan or they only qualify for a portion, it allows them to acquire ownership interest to the home via the PMM, whereby they pay the seller every month and the seller is now holding the mortgage. So it benefits both in that regard.
Very interesting. So now let's say buyer interested to buy the house with using PMM and the seller is interested to cooperate. So now what kind of documentation do you need in this
Okay,
situation?
great question. As far as document is concerned, it's analogous to a bank where there is a mortgage and a note. And mortgage, that's a misnomer. People don't take out a mortgage, they take out a loan. The mortgage that they sign is a security instrument that gets recorded, placing a lien on the property that's being pledged as collateral for the money that the bank is lending. The promissory note is the promise to pay back the money. It personally obligates the borrower. And the promissory note will reflect the terms as far as the interest rate, the duration of the loan, whether there's a prepayment penalty or not, a due on sale clause, meaning in the event the person goes to sell the property, obviously they have to pay the whole mortgage off in full. But when it comes to the PMM, there's usually two additional documents that you really want to have to safeguard yourself if you are the seller giving the money. Number one would be a personal guarantee from another person, from a third party. So again, if the person who is taking out the mortgage is delinquent in the payments or can't make them, then they can look to another person. That is like essentially like a cosigner per se in the lending capacity if a bank was involved. But the difference is the cosigner actually signs the promissory note. In this particular situation, they don't sign the note per se, but they guarantee the indebtedness if it's not paid. Another document would be the confession of judgment. What that is, if the person becomes delinquent in their payment to the landlord, to the, I should say, owner/bank, the owner can then take this confession of judgment, which essentially, the name is indicative as to what it does. The borrower is confessing to a judgment for the monetary value of the whole loan. The seller slash landlord slash bank, whatever capacity they're in, can go and file that with the court of the jurisdiction and then automatically get a judgment against the borrower. In the conventional lending situation, foreclosure and all that takes time. Obviously, you got to go through the steps. The bank has to serve a summons a complaint. The person can put in a defense to that. Then you have to get a referee appointed. But in this particular scenario, the confession of judgment gets filed, meaning anything that the person, the borrower has, if they're a W-2 employee, the wages can be garnished, and there's the provisional remedy of attachment. Anything else they own, the seller can attach to that. So that's why you need the promissory note and the mortgage. Obviously, that's in any setting, but the personal guarantee from a third party and the confession of judgment insulates the seller/mortgagee more so in this particular capacity. As again, a bank, which is essentially what they are.
So the two documents you need. One is another third party, like a confirmation, right?
Yes, it would be a guarantee.
Guarantee. And another one, what is the second one?
the confession of judgment. They're
Confession.
basically confessing to a judgment absent the ability to put in a defense.
Okay, excellent. I'm making my notes over here. Okay, so the I can see the question comes over here from Susan. She's asking, what are the risks involved for the purchaser and how to mitigate that?
Well, obviously, the risk for the purchaser involved would be a delinquent in payment. If they can't make the payment, that's going to be an issue. So you want to make sure that you have enough, analogous to having a mortgage with a bank. It's the same concept mentally. You want to make sure that you allocate every month the payment that you're going to make. So the mindset shouldn't be, oh, I have a mortgage, but it's with the seller, not with the bank. So again, that there's no comfort. Nevertheless, it's just who you're paying. But essentially, the concept is the same, that every month you have to make sure you have enough money, because the risk would be if you don't make the payment, A, you're going to get foreclosed upon, B, you're going to get a judgment against you. And again, absent any delay, there's no delay response where if a bank was involved, they could just file that confession of judgment and then move to garnish wages or attach that judgment to anything else that that person owns. So that's the risk involved.
Okay, and how to mitigate that risk?
How would you mitigate the? Just make sure you make your payments, and and make sure
Yeah.
you set aside enough money every month. Again, you have to keep in mind, people. That's the biggest misconception. They think that
Mhm.
it's not a bank involved, that they have more leeway. They don't. The documents are still the same. I mean, obviously, it's not a federally chartered bank, but nevertheless, it's a promissory note. It's a promise to pay back money, and it's a collateralized debt because the house again is placed as collateral. So the only way to mitigate that damage, you have more flexibility though, because it's more personable. I guess you can say to the landlord or the owner of the house, hey, look, I'm having a tough time this month. Can I just give you a little bit? Where with a bank, you have to go through a formal modification process. You can't just pick up the phone and say, I had a rough month. I can't really make the full payment. So that would be the way to mitigate. But again, that's not the best form of practice. You don't want to get into that situation because, again, it's going to leave a bad taste in the
Yeah.
owner's mouth who you're paying every month. And then they do have the right to file the confession of judgment. There's no provision saying, well, you could pay me a little bit every month if you fall behind. So to mitigate would be to keep on friendly grounds, and but again, ideally would be just to be consistent and timely with the payments,
Yes.
as if you
Oh,
would if it was a bank.
I see there is a risk. If you cannot pay, it's going to go ultimately to auction,
It's
right?
the same concept. I mean, yeah, the same
Yeah.
concept. The same remedies are available to the seller. So
Mhm.
the risk would be, obviously, don't run, don't go on spending sprees. And again, I think the mindset, the biggest misconception is, oh, I'm paying John Smith. I'm not paying, a Bank of America. Doesn't matter.
They're acting as a bank. Yeah.
Absolutely. They're not lending money per se, but they're allowing you the option to buy by you paying them every month to pay off the balance of the purchase price that's due and owing, but by the same mechanisms and dynamics as if it was a loan from a lender.
So now, from let's talk about from the like a seller's perspective, like what
Mhm.
kind of risk? Because risk they can lose the house, right?
Well, the risk with the seller is, obviously, even if they get the confession of judgment, it's still from an eviction standpoint, the person still owns the house, and the foreclosure process would be the same. That's the risk. The person doesn't, doesn't pay. They'd have to invoke the same path by which to foreclose on the house and then eventually to get the warrant of eviction. But they do have the confession of judgment. So again, that's an added insulation for the seller that mitigates their risk. Because if the person does have a job where they're, a W-2 is, or they own other properties or anything else, if you do an asset search against the person, again, once you file the confession of judgment, you can attach to other properties that they own or other real property that they own.
Now this is one of the best another options we see that, but in this the how is the market right now? That is the seller market, and in this market, no seller is gonna willing to do this
Oh no,
option.
that's what I'm saying. This is
Mhm.
more, again, that's why it's an unconventional alternative means of purchasing. But if you look now, it is a seller's market, but the interest rates are going up, so
Mhm.
that's going to potentially compromise people's ability to get a loan for the amount that they want, or if guidelines become a little more stringent. This is something that it helps and people don't really know about. So that's why this would be, if nothing else, goes well and everything else fails, this is always an option. And where you really find it, irrespective of whether it's a seller's market or not, where I mostly find this in my practice is
Mhm.
where a landlord and tenant are involved. That's why I keep saying the word
Mhm.
landlord.
Mhm.
Reason being is when you rent to someone, obviously, especially for a perpetual amount of time, someone who's been in the house for 10 years, raised a family, could have kids in school, has made improvements to the house. So they treat it like it's their own. And
Yes.
typically when a landlord goes to sell, unless there's a very contentious relationship between the two, they'll give the tenant the right of first refusal to buy the house. But again, if the tenant doesn't have the credit worthiness to get the full money, that's where they'll enter into this type of arrangement where, analogous to what we were discussing. So that's primarily where you'll see the PMM, where it's a tenant buying from a landlord who doesn't want to leave. Obviously, the tenant doesn't want to leave the house that they've improved, especially if their children are enrolled in school already. And they've been in the house for so long. Because the mindset with a tenant, when you stay that long, you don't look at it as if it's not yours. The
That's right.
mindset is, this is my house. You use the preposition mine, but it's really not. So that's where you find it in that regard. But you'd be surprised. There's still things in that nature where, especially in the seller's market, where you will see that.
Yeah. So
Not optimal, but it's available.
but most likely it's gonna be like personal level arrangement. It's not gonna be like a common practice, right?
Absolutely not. No, definitely not. This is, like I said, this is an alternate means. This is outside the realm of conventionalism. But again, it's a lot of people don't know about it, or if they do, they don't know the mechanics behind it. But it allows, again, the purchaser a purchaser the ability to purchase a home satisfactorily and become a homeowner, and the seller to, again, mitigate their monetary loss if they're in a position where they can't make the payments, or it's really draining them financially, or again, if the house has been on the market forever and a day, and the only taker for the house is someone who needs a PMM.
Mhm.
So it becomes a mutually beneficial arrangement. But again, to reiterate, definitely not commonplace. This is outside the realm of the conventional real estate
Okay,
world.
so it's like a seller is or landlord is holding the note, right?
Yes, correct.
So it's the same thing. Landlord is holding the note. He's just
Yes.
giving some advantage. Sometimes maybe he's holding 50% of the
Right.
note.
It depends. It could be,
Yeah.
again, it could be the entire amount. It could be just a portion. It depends on, the nature of how much the borrower can buy. And obviously, it's in everyone's best interest to have the note reflect as little as possible, because then that provides more equity to the buyer in that situation and less risk to the seller because there's less money that they have to collect. So again, that would be contingent on what the purchase price and, how they work out the dynamics as far as that's concerned.
Yeah, so I see this practice is common in commercial. I see commercial is more frequently people are doing this
Yes,
kind of
much more
practice.
frequently in commercial. Yes.
Yeah, am I right?
Yes. It's more
Okay.
frequent in commercial. And again, primarily where you see it as far as the hierarchy is concerned at the top level is in residential where a landlord and tenant are concerned.
Mhm.
And it
Okay.
allows, again, it allows the tenant to stay in the home that they've been in and basically have called home and don't want to leave.
Yeah. So Anthony, we're very close to the end of the show. So we're just gonna be touching another last part. That is, what is the other alternate of the PMM?
Right. This is the alternative means we were touching base on this in the infancy
Yes.
stage of the program. It would be the lease with the option to buy.
Mhm.
What that means is because think about it, some sellers don't want to be banks. You know what I
Yes.
mean? They don't
Yes.
want to lend money. So and also they don't want to be landlords either. But being a landlord is less riskier than being a bank.
Mhm.
So again, if they do have someone because they can't get the household who needs to come in, or they have someone who's willing to buy the house but doesn't have the credit worthiness at the time, and there's no other takers for the home, they can enter into the lease with an option to buy. Essentially, the person will be renting the home, but they put down a certain amount as a down payment, obviously not a significant amount. And then every month they pay rent, and a portion of that rent goes towards the down payment. It works as a credit in the as far as an escrow is concerned. So that builds up the down payment. And then at the end of either a year or 2 years, they'll set the duration. At that point, the renter would have built up their credit worthiness or would have been able to now borrow money where they weren't able to and purchase the home. So usually it's a short-term lease, 2 to 3 years. And again, it allows the renter to build up their credit. Every month they pay, a portion of it is obviously rent, and then the rest goes into the escrow account that goes towards crediting the price. And also the warranty of habitability that's applicable to most landlords, that's more relaxed in this type setting, whereby plumbing, heating, ventilation, all that has to be the landlord's responsibility, but the lease with an option to buy, it can shift to the buyer, to the renter, more so than if it was just a standard landlord-tenant relationship.
Yeah, and the benefit is, I think that seller is not carrying all the like services and
Right,
everything.
exactly. I
Yeah.
always say converting to cash. That's really what they're doing.
Mhm.
As long as they're getting a stream of income that's helping with the bills, that helps them, and it also helps the buyer because now they're building up a down payment or a credit towards the home. And you can have a hybrid situation: the lease with the option to buy, and then eventually it can convert into a PMM
Yeah.
where they turn around and say, "Look, no more lease, but you know what? I'll carry the note for the residual balance. You had 3 years in the lease. You have more money available." So again, it can be a conversion or morphing from the lease with the option to buy into a PMM scenario. But at the end of the day, it allows the seller to sell, it allows the buyer to buy, relieves the seller of debt, and it gives the buyer the American dream of owning a home.
Thank you so much, Anthony. We are almost end of the show. So, Anthony, before we leave, why don't you tell about yourself? If people like to reach out to you for the council, what is the best way to reach out to you?
Sure, great. Thank you so much. My email address is anthony@onpointland.com. It's all one word, ONPOINTLAND.com. My number is 516-600-9750. And I'd be more than happy to answer any and all questions, whether it's on this particular topic or anything that's of concern to anyone.
Thank you so much, Anthony, for the show. So, dear audience, I hope you get the good value from today's topic. And Anthony really delivered a lot of values today, and I personally learned a lot of things today. And so today is that's all for today. And until next time, and see you next week, another episode, and we're going to be discussing another trending topic. Thank you, and have a great day.